Assalamualaikum, my name is Nurul Izzati Rabi and my matrix number is S588559. My company's name is Mak Group Berhad and it was founded in 2006 with a financial year that ends on December 31st. Firstly, I will address the company's accounting standard, which is MFRS 112, income tax, deferred tax on assets and liabilities. The second point is the initial recognition, whereby the deferred tax is not recorded if the temporary difference arises from the initial recognition of an asset or liability is a non-business combination. Transaction has no impact on accounting or taxable profit or loss at the time of the transaction. The third point is subsequent measurement at each reporting date. Deferred tax liabilities are assessed and the carrying amount is changed to account for changes in tax rate or rules. Changes to the income statement are recorded as income or expense unless they related to an item reported as outside profit or loss. Finally, the statement shows the sum of the year 2022 and 2021. As for 2022, the deferred tax for financial position was 15,822,382 ringgit, while profit or loss were negative 8,055 ringgit Malaysia, as shown in note 24. Furthermore, for the year 2022, the amount in SOFT for deferred tax is 6,027,853 ringgit Malaysia, and for profit and loss is 822,449 ringgit Malaysia, as shown in note 25 in the annual report. Thank you.
Assalamualaikum and hi. So I will continue explain about deferred tax for my company, which is Paragon Union Berhad. This company engaged in the manufacturing and distribution of commercial carpets, rugs and automotive carpets. Firstly, accounting standard for deferred tax is amendments to MFRS 112, income tax. Deferred tax related to assets and liabilities arise from a single transaction. Next, for initial recognition, deferred tax recognized using liability method, providing for temporary differences between carrying amount of assets and liabilities in statement of financial position and their tax basis. Okay, so now we move to subsequent measurement. Deferred tax are recognized for all unabsorbed tax loss, unabsorbed capital allowance and unutilized reinvestment allowance to the extent that it is probable that taxable profits will be available and can be utilized. Lastly, the amount of deferred tax that Paragon Company stated in statement of financial position for year 2022 was RM8044 and for year 2021 was RM54907. Meanwhile, for statement profit or loss was not stated, and the notes for deferred tax was note 7. So that's all from me. Thank you.
For specific information about Berhad and report indicates that they are specifically adhering to MFRS 112 for deferred tax. Okay, under MFRS 112, the deferred tax is initially recognized when there are temporary difference between the tax base of an asset or liability and its carrying amount in the financial statement. Okay, deferred tax liabilities are recognized for all taxable temporary difference, while deferred tax assets are recognized for all deductible deferred temporary difference. After initial recognition, deferred tax asset and liability are measured at the tax rates that are expected to apply in the period when the asset is realized or liability is settled. Okay, the carrying amount of the deferred tax asset is reviewed at each reporting date and reduced to the extent that is no longer probable that sufficient taxable profit will be available to allow the benefit of part or all of the deferred tax asset to be utilized. Okay, according to the 2022 SOFT of S&P, the deferred tax asset was 6.7 million and the deferred tax liability is 0.8 million. Okay, for 2021, the amount is 6.3 million for the deferred tax asset and the deferred tax liability are 0.1 million. Okay, the deferred tax liability recognized in SOPL 2022 was 0.8 million and 2021 was 461 ringgit. This amount reflects that the adjustment made for deferred tax asset and liabilities as per MFRS 112. The deferred tax liabilities in the first year are mentioned in the note 10.
The Warisan TC Holding Berhad, the standard is same goes to the other company, which is MFRS 112. For the initial recognition, deferred tax liability is recognized for all taxable temporary differences, while deferred tax assets is only recognized for deductible temporary differences and utilized tax credit if taxable profit is likely to be available in the future. No deferred tax is recognized for temporary differences arising from the initial recognition for goodwill or non-business combination, asset or liability. For the subsequent measurement, deferred taxes are measured based on the tax consequences that will follow from the manner in which the asset or liability is expected to be recovered or settled, and based on the tax rate enacted or substantively enacted at the reporting date that are expected to apply to the financial period when the asset is realized or when the liability is settled. For the amount in statement of financial position, deferred tax assets are decreased from 2021 to 2022. Deferred tax liability is increased from 2021 to 2022. Amount in the profit or loss, the amount is increased. If both years use note 12.
Next, I will continue explain about the deferred tax of next company, which is Klasita Holdings Berhad. Klasita Holdings Berhad is one of the biggest manufacturers and exporters of lingerie in Malaysia. The accounting standards of this company is amendments to MFRS 112. Next, their initial recognition is the deferred tax is provided in full using the liability method on temporary differences arising between the tax basis of assets and liabilities and their carrying amounts in the financial statements. Deferred tax relating to items recognized outside profit or loss is recognized outside profit or loss. Deferred tax items recognized in correlation to underlying transactions either in other comprehensive income or directly in equity. Next, their subsequent measurement is measured at the tax rates that are expected to apply in the period when the asset is realized or the liability is settled, based on the tax rates that have been enacted or substantively enacted at the end of the reporting period. Next, their deferred tax liability amount in Statement of Financial Position 2022 is RM1442923 and in Statement Profit or Loss is negative RM720239, which is referred to Notes 15 in their annual report, while their amount of deferred tax assets and liability in Statement of Financial Position 2021 respectively is RM3782278 and RM1270122, and amount in Statement Profit or Loss is negative RM133285254, which is also referred to Notes 15.
Hello, my name is Najwa and I will present about Zulian Company, which is the accounting standard is same with the others company, which is using MFRS 112. The initial recognition is it's recognized using the liability method, and subsequent measurement is it's measured based on the expected manner of realization or settlement of carrying amount of the assets and liabilities using tax rates. The amount in statement for 2021 is for the deferred tax asset 7086 and tax liability is 4758 and using note 22, and the amount in statement for 2022 is 1305 using the note 8.